just begin. So good morning, and thank you for joining us in the latest in the Skills for Scale webinar series on AI. And this morning in the series on the power of applied intelligence, we are going to be talking about funding your AI ambition. So the purpose of this series is really to kickstart AI development and progression in Ireland. So a recent survey in the European Union gauging the use of technologies based on artificial intelligence found that awareness of AI within the business environment is now almost universal. However, levels of adoption are low, while those projects lead to impact. Those projects that lead to impact are lower again. Some organizations suffer what the analyst McKinsey refers to as pilot purgatory and proof of concepts that never reach production. So the purpose of this webinar series, The Power of Applied Intelligence, is designed to provide a no-nonsense, practical and pragmatic advice to business leaders to improve their understanding of artificial intelligence, demonstrate where growth exists and where investment is taking place, and sectors of interest and applications which are delivering the bottom line return on your investment. So this is the fourth in a series which has been very popular so far. And the Funding Your Ambition section investigates the various funding mechanisms available to business leaders and entrepreneurs to reduce the cost of bringing on AI-powered innovation to the market. And our speakers will cover Irish state supports, European schemes, and discuss those provided from venture capitalists to provide seed investment. So we have a number of speakers this morning, and we have a fairly tight schedule. So I'm just going to share my screen with the agenda slide. So first of all, this morning, we're going to have John Durkin, Digital Transformation Specialist with Enterprise Ireland. And John is going to talk about Enterprise Ireland funding supports. Then we have Jill Leonard, also from Enterprise Ireland, and she is a Horizon expert, and she'll be talking about Horizon funding from Europe. So Mark Sullivan then is a partner for R&D incentives at BDO, and he'll be talking about the R&D tax credit and the knowledge box provisions. Then we're going to be joined by Alan Beechinor, who's CEO of Altada, and he'll be talking about the company perspective on funding. So as you can see, it's quite a tight agenda that we have this morning. So I'll just draw your attention to the buttons you have at the bottom of your screen. So you have a Q&A button and a chat button, and I see there's a comment in there already. So we'd like to encourage you to put in your questions as we go. We have an open discussion at the end of the presentations, and we really want you to use that to ask any questions you have and to really make the most of the expertise that's there. So please do put your questions in throughout as the presentations go, and we'll address them all when we get there. If there's anything else you want to add in terms of references or resources that you have found useful yourself that you want to share, please do use the chat for that, and we'll reference it there, and we'll get our speakers to put any references that they want into that as well. So please do make the most of that in terms of asking questions and sharing and referencing the resources there. So I'd like to introduce our first speaker then. John Durkin is the Senior Digital Transformation Specialist in Enterprise Ireland, and he's currently working as part of a team with EI, which is focused on supporting Irish businesses on their digital journey. John is a veteran of the industry and has appeared for us before for the Skills at Scale series. So, John, welcome.
Good morning, Paul, and good morning, everybody. Great to have you all here bright and early. So what will I say now? I will see if I just share this out and get ready then to go. Okay, share. Put it in slide mode.
Okay, that looks good.
Right. Okay. I will minimize this. Okay. Right. So this morning we're going to give an overview of the different types of funding that Enterprise Ireland has in supporting companies from digital and AI. And we've a range of supports that cover it, and I'm going to break it into two categories. So the first is for what we call our high potential startup companies. So these are companies, and I'll go into a little detail on that. And then the second area then is going to be for established companies who are, we would say, companies more than 5 years of age. And then I'm going to talk about, within that, I'm going to talk about the digital innovation. And also, which is this website gives you a link to all of our offers that can help around digital supports. And the one I'm going to focus on today is going to be the Agile Innovation one. But these links here give you a broad breakdown of all the different types of supports if you're a high potential startup, or also then if you're more of an established company, looking at the supports around what we call digital innovation. And there's a whole breakdown of each of the supports there with that. Outside of those supports for digital and high potential startups, there's also available a full breakdown here of all of our supports right across the board. But today's focus is very much, I suppose, on the digital journey, where it's going to come in. So I'm just going to just open up this, if this works, just to show you. Okay, so what we have here is a breakdown of all of our funding supports, and we call it Plan Your Digital Journey, Optimizing Your Business, and then Digital Transformation. And within this, very much part of it is where AI can start to fit in. So you can see AI in the idea of optimizing your business, and also very much on the digital transformation. So where AI can enhance with new products, new services, lead to greater efficiencies in how you're using it. But as we all know, one of the key parts to any piece of this is how you're going to start planning your journey, to start off about where is the right application for AI. So just using it for the sake of it is very clearly not the place to start. So we have some supports around here about helping you evaluate that. Then we talk about then our optimizing it and the digital transformation, which are our larger supports. So that's just kind of an overview where you can get more information on that.
John, it's Anthony.
Oh, Anthony, sorry, yeah.
No, I think we lost your screen there for a second. It wasn't, it didn't show.
Oh, sorry. Okay, right. No problem. They're in the slide deck, and I'll put them in the chat. So then afterwards, then sorry about that. So to start with, then is the Innovation HPSU Fund, and this program is targeted at companies who are what we say less than 5 years old, so startup companies in particular. The difference with this is it is an equity investment, so it's not a grant, all right? And there's a few criteria around that. The first one, the company must be less than 5 years old. The second one is that the company then has no trading record in time of application, or at least 15% of total operation costs must relate to R&D expenses. So the idea behind this is that the startup who's investing a lot, particularly in new product and development, and very much the focus on the R&D. And you can see the other criteria is there on the screen. I suppose the key point of this one is that Enterprise Ireland invests in a partnership with the investor in an investment round. Okay, so the important part here is for you to get funding under the Innovative HPSU Fund, you must have matching funding with that. All right, so that's kind of one of the key things with this offer, that it's an equity investment rather than a more traditional grant, and it's only available to the high potential startup companies who are less than 5 years of age. Okay, so but this is kind of our main offer that we do around for startups. Now, along with that, we then have this idea of what we call the Agile Innovation Fund. Now, this is more for companies who are established. They are looking at developing a new product or new service, or they're looking at ways to optimize their business. Okay. Now, what this does, and we have a little summary here on this slide, is showing, are you about to start off a new R&D project? And the focus of this is very much that it's capped at a 300K spend project. So it's more for short-term projects. It's there to get started on the journey really around it, or a small I suppose, quick focused R&D project. Okay, so that's where we would see this being used quite a lot. We've also have another part to it, which is what we call business innovation. So the R&D element is for a new product or service traditionally. And then the business innovation is very much around implementing a new way of working for the company. And what we look for here is the step change in terms of new production or delivery capability or business practices. And what we've seen in the areas of AI around business innovation is companies are starting to bring in processes to either maybe scan documents within their business and automatically transfer that data in. So that's cutting out some of the manual processes that will be there. Or if you're looking at R&D, we have companies who are doing very short-term but specific projects that are looking at adding a piece of AI into an existing product or service. So that can be often some ways to do that. And you can see the funding rates down there are for small companies, 45%. So that's companies less than 50. Medium companies between 50 and 250 in size of employees, and large companies then over 250 employees. And the grant rate reduces down based on that. And you will see then as well, then for the business innovation project, so these are funded at 50% regardless of company size. And the only difference is if you're a large company, that funding comes out of your de minimis allocation. Okay. And the maximum grant for both the R&D and the business innovation is 150,000. All right. So the focus again for this is very much short-term projects. Ideally 6 to 12 months is usually in around 6 months. We tend to see them coming in for the R&D. The business innovation ones tend to be more up to about 12 months. And that's usually just that there's a change process involved within it. In both cases, you're eligible for salaries for employees. And on top of that, there's a 30% overhead that's given. And on top, along with that, then too, you've got material costs, which might be licensing, for example, in the cloud. Or if you're looking for a hosting environment for your dev and test area for the piece of the project only. Obviously not your entire business's R&D would be covered, but for the piece for the project is what we will cover for something in that area. And also along with that too, we do allow then a big part on consultancy, and up to 50% consultancy is allowed under the business innovation. Under the R&D, it's usually a lower percentage. And the idea of that is because the focus is on capability building. And the focus on any consultancy that has been used is, does it add value to the company? And is there capability building within it? So that's two of the important parts with that. So that's there a piece then on the funding landscape that we had, the two main offers that we have. And I'll put the links into the chat around them as well there, because they were missing at the first part. So that's a quick overview of two of our key fundings for both startups and HPSUs.
Thank you very much, John. That is a very good reference to see that there is that much available locally. So next I'd like to introduce Jill Leonard, and Jill is the national contact point and national expert for Horizon Europe, working in Enterprise Ireland and supporting the European Innovation Council programme.
I can see that.
I can see that
so,
now.
Perfect.
Thank you.
I think I've kind of gone through that slide, Sarah. Thank you.
Yeah, perfect, no problem.
So the next one is covering where I suppose the EIC accelerator fits into the three pillars of Horizon Europe. And as you can see, it fits in on the right-hand side. And we also look after the European innovations. Next slide, Sarah, please. So these are the three funding schemes under the EIC, and they have a budget in Horizon Europe, which runs from 2021 to 2027 of 10 billion euro. So coming in under this are the EIC Pathfinder, EIC Transition, and the EIC Accelerator. And given the size of the EU budget, there's so much concentration on the industry area here. Next slide, please, Sarah. I just put in this slide for completeness because the actual work program is huge and contains a lot of other areas besides the accelerator. So I'd like to say, if you're interested in any of these areas, give me a shout later and I can discuss them with you. Next slide, please, Sarah. This slide shows Ireland's success in Horizon 2020. And as you can see, we had 72 companies who got over 150 million. And you can see it's quite well spread across the country as well. And I've also put in there the various areas, and I don't know, you probably can't read them, and when you get the proper slides, you'll be able to see what they say. Next slide, please, Sarah. So this is the 2021 results, and this was the first year of Horizon Europe. And as you can see, with 7 companies, and I've listed the companies there, and they got between them 46 million. So if you consider that we got 150 million for the whole of Horizon 2020, this is a huge success for 2021. Next slide, please. So what are they looking for? They're looking for startups and SMEs who want to scale. They have to have deep tech, disruptive innovations. They must need significant funding. But the key point here is that the project must be too risky for private investors to fund by themselves. Next slide, please. So again, I think I've kind of covered this. The accelerator is a funding instrument for startups. The projects must be high risk. You can receive a grant of 2.5 million, which is 70% funded by the EU, or you can get equity up to 15 million, or in certain cases for the challenges, you can get over 15 million, but we haven't seen any examples of that yet. Next slide, please, Sarah. Now, I don't know if any of you are familiar with technology readiness levels, but this is what the Commission run to describe a technology. So say TRL 1 to 4 would be like a pathfinder, 4 to 5 would be transition actions, and then the accelerator runs from late 5 to 8 for the grant and 9 for equity. Next slide, please, Sarah. So you can get a grant and investment, which would be 2.5 million and up to 15 million in the equity. The grant first, a grant only, or investment only. And I'm not going to kind of try and explain all of that, but if you have a specific question on it, just put it in the chat and I'll answer it later. Next slide, please, Sarah. So how does it all happen? Well, the Commission have changed their whole application system. So a short application is where you put in your idea, you respond to a set of questions on an AI tool, and it's usually around 5 pages, so it's very, very short. You have to submit 10-slide presentation and a video pitch at the same time. And this part of the call is continuously open. Thanks, Sarah. The next slide. For a full proposal, you must have got past stage 1. You have to complete a full business plan and a very long application process within the AI tool. And you also have to submit at the cutoff dates. And the next one is actually the 23rd of March. There'll be 3 of them in 2022. Next slide, Sarah, please. So this is the evaluation step by step, and I just really put it in for information. We've already said about stage 1. You put in your proposal, you submit your full proposal, you then pitch your innovation if you're successful to jurors, and after that, if you're kind of successful, you'll get a grant and your investment component. Next slide, please, Sarah. So I just put this in again for information. It's the evaluation criteria, excellence, impact, and implementation. On the short application, there are 4 evaluators and you must get 2 goes. On the full application, there are 3 evaluators and all 3 must give you a go to get as far as an interview. Next slide, please. So again, the interview is exactly the same as all the other parts. They have a jury of panel members. You have to answer the questions. There are no set questions and they can come from anywhere about anything. And if you're selected at this stage, you will sign a contract for the grant in the first place, which takes maybe 3 to 6 months. And the equity element can take more than a year. But at that stage, you will only be starting your project anyway. Next slide, please. So the resubmission rules are very strict. And the reason for this is to cut down on the number of applicants. So if you're rejected once for the short application, you can reapply at any time. If you're rejected twice, you'll have to resubmit. You have to wait 12 months before you can actually resubmit. Next slide, please. The rule is the same for the full proposals. If you're rejected once, you can resubmit, but you have to have a considerably improved proposal. If you're rejected a second time, you have to cool off for 12 months and start the whole process all over again. Next slide, please, Sarah. So the interview rule is the same. If you're rejected, you have to, more than once, you have to wait 12 months before you can apply again. But they can also give you a seal of excellence, which in the past wasn't considered very useful, but actually now it introduced you to a whole range of business acceleration services, which actually help companies to get on to the next stage. Next slide, please. I just put this in so you can see what the AI tool looks like. If a company is applying, there's 3 links here. If a company is applying, they have to create an account in the funding and tenders portal. Then they have to go to the funding and tenders portal itself, and then they have to log into the AI tool. So it's not a difficult process, but you're not going to be inspired as to where to go, which is why I put the links in there. Next slide, please. Again, I put this in just so you could see what it looks like. If you haven't passed stage 1, you can't apply to stage 2, which is a problem because most companies are pretty tight against time for the cutoff dates and they haven't a clue what's coming in stage 2. Next slide, please. So Sean Burke and I are the 2 national contact points for the SMEs and innovation. Our job is to help you. So if you want to discuss any element of the program, the EIC program, please come to us and we can guide you through the process and we can hopefully help you get more funding for Ireland. So that's it for the moment. Thank you, and sorry about the slides.
That's okay. Thank you very much. It was an excellent recovery. Just a reminder, though, that there's a lot of links and references being shared here. So first of all, these sessions are recorded for later playback, and you can see them via the ICT SkillNet YouTube channel. But we do have the website facility as well for sharing resources. So there's lots of links being shared in the chat as well. Just a reminder, though, for questions that you want to put to the panelists, and I see there's one in there already, which we will address. Try and keep them to the Q&A so that they're easier to track rather than putting them in the chat, because there's a lot going on there. But Jill, thank you very much for that, and we'll move swiftly along to our next speaker. So Mark O'Sullivan, partner in R&D incentives with BDO, and Mark is going to talk about R&D tax credits and the knowledge box facility. So Mark, welcome.
Thanks very much, Paul. Hopefully everyone can see my screen there, can they? Oh, hang on.
Not yet.
Sorry, there we go now.
There we go.
Yeah.
That looks good. Thank you.
I say thanks for that, Paul, and thanks, John and Jill. It's interesting stuff on the grants and funding side of things. Really, what I want to just touch on is some of the tax incentives there to support you on the AI journey and the general R&D journey. I'll focus on the research and development tax credits, which is probably the most popular and most relevant, but I'll briefly touch on the knowledge development box tax regime as well. And so just to start off in terms of some of the highlights or key points on the R&D tax credit regime, it's available at a rate of 25%. So any of your qualifying expenditure on R&D, you can look at getting at 25%, your tax break or cash refund on that from revenue. and that's on top of your 12.5% standard CT deduction that you get for those costs. The mechanics of it on the cash refund, I'll go into on the next slide, but one important point is that you make your first R&D tax credit claim in the first year of trading, but you can roll up any R&D costs that you might incur in the very early stages of the business up into that first year of trading and claim all of the costs at that point. And as I said, the guys touched on the grant side. Another key point is there's synergies between grants and credits, and you can claim both. The only caveat is that you need to net off any grant amount from your R&D tax credit claim. I have come across situations where companies say, well, actually, we got a grant, so we mustn't be able to get tax credits as well. The reality is you can get both. You just need to be careful that you don't claim the credit on the full amount that you net off your grant. And then the final point is that there's a strict 12-month deadline on making an R&D tax credit claim. That's 12 months from the end of the accounting period in which the expenditure was incurred. And again, very important to be aware of that, because there's usually little or no grace from revenue if you try and go in after that 12 months and make a claim for historic expenditure on R&D. In terms of the costs that you can claim, they're similar in nature to the grants in the terms of you can claim your salaries, license costs, hosting costs. You can also look at your expenditure on capital equipment, so be it laptops, servers, fit outs of R&D facilities, or even the actual building of facilities themselves. On top of that, you can look at a small element of overheads, and then if you incur costs on R&D done by unconnected third parties or universities. So by the time you look at all of these costs, there's quite a large bucket typically there, and as I say, you can look at 25% of all of those costs being reclaimable. In terms of the mechanics of the credits, so what you do is you make an R&D tax credit claim as part of your corporation tax filing each year, simply a number that goes into the return, and it's used to offset any corporation tax liabilities that the company might have. In scenarios where you don't have a corporation tax liability, which is very common, particularly in the startup phase of businesses, you can look at tapping into that credit as a cash refund, which can be a massive cash injection and kind of essential, I see, to a number of startups. There is a limit on the amount that you can reclaim as a cash refund, and that's by reference to the total payroll liabilities of the companies. Again, so if you're looking at the computer science, AI field, typically the largest portion of companies' costs is salaries. So we don't typically see an issue with this cash refund limit being hit, but I just wanted to mention it for completeness. So if you're in this cash refund bucket, the mechanics of how you receive that is you get a third of that R&D credit in year one, and then you get 50% of the balance in year two, and the final payment in year three. So in simple terms, you can look at it that you get a third over the course of a 3-year period as a cash refund to the company. So the mechanics and the availability of the credit is all fantastic, but there are some gatekeeping points from revenue side of things in order to qualify for the R&D tax credit regime. And the key piece is what they kind of call the science or technology test, which has these 5 key criteria to it. So if we just briefly look at them, the field of science or technology is a relatively straightforward tick the box, I would suggest, for most people on this call, in the sense that there's a field of mathematics and computer science, which it's quite a broad bucket that activities can fall into. The type of research refers to the fact that it needs to be creating new or drawing on existing knowledge or experience for the purpose of creating new or improving existing products, processes, or systems. So similar to what John talked about earlier on the grants. The other 3 criteria are under technological advancement, technological uncertainty, and your systematic and investigative or experimental activities is the piece where we see companies fall down or maybe not have the right structure when they start off the project to be able to defend their claim when revenue review it. So effectively what the technological advancement and technological uncertainty points are talking to is you need to be able to demonstrate you're doing something that's technically innovative, novel or new, and that has an element of technical risk or challenge to it, rather than it being, let's say, a standard development exercise or something that's just good or good practice for the business, but isn't necessarily advancing from a technology perspective. And you see this bit of a quote I have here in the document you can have a read of afterwards, but effectively what that's saying is you need to be able to demonstrate that you had a goal at the start of the project and that was documented, that you tracked the work as you went along, and ultimately you can show the conclusions or the output from that work. What I have come across in reality is you see companies that have a fantastic end product or platform or solution, but they haven't documented or proven that there was a systematic approach to trying to get there. And on that basis, revenue is sought to challenge that they didn't meet the criteria and therefore seek to disallow the credits claimed. So my key piece of advice is, if you're looking to set up a project, and the grants help in this sense, because if you're tapping into the grants, you'll have to do this work up front in setting out your project plan and your objectives and proving why it's technically innovative. But that's the key cornerstone of your R&D tax credit claims as well. And then as you can proceed through the project, to be sure that you document all the work, be it failures along the way or successes, to show, you know, that it was a challenging body of work. And in terms of documentation, it's just a very simple example. You know, it doesn't need to be, you don't need to be paying tens of thousands of euro a year on document management systems. But if you are able to have a strong project plan, your source code repositories, standard filing systems, and track QA results, test results, as well as having even quite a primitive timesheet or tracking system, it's going to go a long way in defending your claim under audit. So just very briefly, want to touch on the knowledge development box, which is a relatively new new tax incentive. And what it's looking to do is say, if companies carry out their R&D in Ireland and then go on to develop qualifying IP and exploit that IP from Ireland as well, they'll look to give you what's known as a knowledge development box allowance, which acts to reduce your corporation tax rate from 12.5% down towards 6.25%. 6.25% is the bottom line, but in reality, there's a complex calculation involved there that you'll probably end up somewhere in the middle from our experience. So in around 8-9% of an effective tax rate. So over the long term, that can be extremely useful. But as I say, it's a complex calculation, can involve a transfer pricing assessment requirement as well. So I'm not going to spend a lot of time on it, but it's just to make you aware that it is there, and I can go into detail on it with anyone that wants after this call. Just to close out on it, in terms of what a qualifying asset is. So again, I would guess for the majority of people on this call, it would be a computer program. So it could be a patent, you know, it's not, you don't typically see a large amount of patents in the computer science space, certainly on the startup side, but a computer program will be equally valid, and there is a definition around that which I can share with anyone that wants to see it afterwards. And then the IP for SMEs is effectively, it's akin to a patent, but it's a slightly less onerous administration process, which you still need to go to the patent office and get certification that what you developed is new, novel, and creative. And then just a final slide from me, because I think it's really useful, again, just to show people can come at the grants, come at the credits and think, oh, look, there's a body of work there and maybe it's not worth my while. But once you get into the mindset, get the company into the process of documenting what you're doing, applying for one or two of these grants or credits, you'll see that there's synergies in terms of what's required across them all. So very quickly, for a small amount of upfront work, you can get fantastic benefit across a range of supports here in Ireland. That's it from me for the moment. Thanks, Paul.
Great. Thank you very much, Mark. That's very encouraging to see. And I see there's a couple of questions coming in around that as well. So we'll get to those in the Q&A. So that's great. So moving on to our next speaker this morning, then Alan Beechnor is co-founder and CEO of Altada Technologies, a global artificial intelligence platform solution provider which creates operational efficiencies for clients by levering cutting-edge AI to unlock value in data, enhance automation, and implement data-driven decision-making. So welcome, Alan.
Morning. Hey, Paul. Hey, everybody.
And maybe, Alan, if you want to just start by giving us a little bit more background on the company in terms of how long you've been in operation, that sort of thing, and how you came to look for and engage with some of the facilities that we've heard about this morning.
Yeah, very good. Thanks, Paul. And again, good morning to everybody. I know it's an early start, right, for most. So yeah, in terms of Altada, so we were founded in 2017 by myself, and we went down the kind of, let's call it the R&D, artificial intelligence innovation route, which was at that time, you know, it was a more complex narrative than most of the entities that were in the market at that time for funding. So we had to set about organizing ourselves to define our business goal, right? So in 2017, we started creating an AI platform, and from there we started scaling. We went through a reorganization in 2019, where we went through an examination process, and that's some of the stuff I'm going to speak to today briefly, in terms of ensuring that you pick the correct funding partner. It's a fundamental part of growing your business, and especially, and more importantly, when it is innovation or something that some investors would deem to be intangible, right? When you're creating something from, you know, cessation and an idea, that's not really something you can touch and feel. It's not bricks and mortar. It's not a business that you can touch. You need to kind of be very clear as to what you're trying to achieve. But in terms of a data point, so we were a team of 9 in November 2019. And as we stand today, we've over 130 staff. We're in 13 locations, and we're scaling to €1 billion valuation in terms of our next funding raise. And along that journey, we've got the scars and the experience to show, right, in terms of living that. And I think a very important point, Paul, here is just echoing on the presentations that have gone thus far. You know, John in particular, from an Enterprise Ireland perspective, getting that early stage support and helping, you know, getting the help that you require from government-backed programs to define your business plan is critical in terms of, you know, it's not just about funding, right? It's about what type of funding you require and how much you need. And one thing that kind of gets lost in translation quite often is, if you're defining your plan, are you a high growth company? Are you a SaaS model? Are you a cash business? Are you going to be a business that needs X amount of investment for R&D in terms of building out that proprietary technology? And these are all fundamental parts of how you then address yourself and how you actually promote yourself in the market. So when you're building, you know, that funding plan and defining what exactly is required, you can look at it from, you know, many different levels, right? You can say, okay, am I a business that I'm going to bootstrap? So you're looking at it as a traditional startup business, you're bootstrapping, you're getting, you know, a bit of kind of activity in the market. But one thing that screams, guys, and I say this quite often, is early money screams in terms of customer engagement and early stage funding. And that's the one that sets you on that pivot to the next stages of what your company looks like. So one thing that we are actively and proactively involved in is the accelerator ecosystem. So from an Altada perspective, we work actively with Tangent in Trinity College Dublin, where we're the key sponsors of an AI accelerator, Alcessor. And within that program, we practice what we preach, right? We're showing companies how to define themselves, how to get that identity, and how do they differentiate from the many, many proposals that venture capitalists and angel investors are receiving. Okay. So I think what's very important is when the founding team set about that strategy, that they are cognizant of how they're going to manage their cap table going forward, how they're going to manage dilution downstream, and setting the culture from day one in terms of their funding partners. And I think all too often, entrepreneurs would see funding as kind of, it's a utility, it's something to drive the business forward, but it's far more than that. There is an existence of smart money slash supportive investment. Okay. So when I look at kind of different streams, you've got, if you look at it sequentially, you've got government programs that will assist you at the early stages, anything from the local enterprise offices to Enterprise Ireland. You've bootstrapping, you've got an active angel investment network. But when you want to get beyond the angel investment network, essentially in Ireland and in many other countries, that's when you're getting into different conversations in terms of working with global partners. We were very fortunate. We ended up working with a local firm, Ericsson Ventures, who've been extremely supportive in the Irish ecosystem, as have Enterprise Ireland. And again, speaking to that from an experience perspective, we also ensure that client acquisition was part of our business plan. So there's a funding plan, but then there's acquiring clients. That is the best form of investment that you'll ever receive. Okay, because it does a number of things. It shows that you can have an addressable market. It shows that you've got a go-to-market strategy, but it also shows that somebody is willing to pay for your product. And that's a fundamental part in terms of valuation. Okay. And again, when you're getting funding partnerships, there's accelerator programs, incubator programs, there's university and college spinouts. But the fundamental part of funding for AI is getting easier, right? I mean, in the last 2 years, the AI adoption has increased. The knowledge in relation to AI has got more, I guess it's got crystallized in terms of businesses now realize that AI is part of, innovation. It's not like an unknown entity where what is the kind of application of AI? What's the business case for AI? So for companies that are starting out, or depending on what stage you're at, the advice and the suggestions that I would give is ensure that you deploy a team that has done it before. And that's where Altada has been demonstrably successful in terms of we know enough to know what we don't know. So if we don't have the skills in-house, we partner. For example, we partner with Clearwater Finance for our corporate finance requirements, and they've been assisting us to build out that plan for funding. We didn't look internally to see who has done it before. We brought in the people that have done it. And then speaking to Mark's point earlier, if you're looking at taking advantage of the many R&D grants, incentives, and tax incentives, bring in the people that have done it. Bring in the advisors that have managed that process before. Don't try to do it in retrospect, because a lot of the lessons that we would have learned in previous years is you're trying to do something in retrospect, whereas if you start with that hygiene in place at the beginning, you're preparing yourself for that strategy. So in essence, if you're preparing yourself for R&D and getting that R&D incentives and initiatives, make sure and ensure it's built into your plan. You know what you're entitled to. You're building your team around that, and then you're either a high growth business or you're a high growth R&D business. Like it depends on what your strategy is. So I guess from a funding top down, define the innovation, define your funding strategy. Don't go too onerous with it, right? I mean, when I see 3 to 4 year business plans, I know we need to do that in terms of the hypothetical and ensuring that we have some kind of forward thinking. But the reality is, if you've got a really segmented business canvas for 6 to 12 months, that you know what you're about and you know how much funding you require from that 6 to 12 months and pushing out to 18 months, that's good enough for you to start getting a clear idea of how many employees I need, what technology am I deploying, who's my target market, who's my clients, and all that preparation is all a critical part of you being able to sit across the table from a potential investor, regardless of government backed or not, or privately or independent or institutional money. It's good hygiene for you to understand exactly what am I actually pitching here? What is the idea? And how much does it require to scale? Because that's the element that unfortunately gets missed a lot in essentially the Irish ecosystem, right, is that we need to be proud of what innovation we're creating, put a value on it, ensure that you can obviously be credible with the valuation, but don't undervalue yourself. And the way you value something is by demonstrating you've thought it through. You've mapped it out, you understand your market, you know the market share that's out there, and you've got some idea of the commercial underlining investment that you require.
Very good. Okay, just unfortunately we're a little bit tight on time, but thank you very much. That's given us a really sort of practical evaluation there in terms of readiness and knowing what you are, I think. So I'd just like to invite our other speakers back on camera, and we'll start to take some questions, because there's a couple of questions come in already. So well, welcome back everybody, and welcome to Anthony Macaulay, Artificial Intelligence Program Manager with Technology Ireland ICT SkillNet, and creator and designer of this webinar series. So there was actually a question in the chat earlier that I think John answered fairly comprehensively, but is probably worth addressing in the open session. The question was, can any of this funding in the programs be used for AI training services, platforms, and tools? So John, you did address it in the chat already, but maybe just briefly cover it again just for everybody, please.
Yeah, no problem at all. So it depends on the where the company's stage is at. So if it's a high potential startup like that, you get it as an equity investment, and so you can use the money for whichever you want, so long as it's related to the business plan. So that's the nice cleanest one. The one then around that for the R&D side then is it's for the yes, we can support like AI services. So let's say you're using an OCR recognition piece in the cloud, you're paying for that service, you're building that into your R&D product, then you can use it for the duration of the project, the cost for that towards the R&D, and that's in that. But it's only for, so for example, if you're also using that in your day-to-day operationals piece, you can't cover that part of the cost. So it's only the cost related specifically to the R&D element. And this goes back to what Mark was saying as well, being very clear about recording your expenditure and what's there. So one thing we'd always recommend is when you're setting up an R&D project, you create a new budget code in your finance system, very simple. And then basically then all costs relating to your R&D, you tag it against that budget center. And what happens then when it comes to the drawdown, you're very easy to pull out that money very simply from your system, rather than trying to break up your allocation within the cloud. And so there's loads of options now there to do that, and I strongly recommend a bit of prep, as Alan said, get your house in order, makes it really easy then to draw down the piece that's there. And I suppose you have to think about it like this, in particularly from an enterprise Ireland's perspective, we want to give you the money. So if you do a little bit of housework and you're able to demonstrate it, you can draw it down. And then on the training side, then what we do, normally we do this as part of what we call our operational excellence. This is for larger projects, and really it's with transformational change within the business, and we do training there. And we've now started covering some technical kind of capability training, and it's around capability training. So for day-to-day training supports that are out there, we wouldn't fund that. But for very key specific and capability building within the business, we'll cover that. And we started looking now at technical capability, in particular around the areas of AI, cybersecurity, that aspects, because they're fundamental to any good product development going out.
Very good. Thank you for that. Well, there's another question then I'll address to Mark first, because it covered you specifically. It says, how long does the knowledge development box last for? So is it a kind of a project by project approach, or is it a kind of a continuous cycle that companies can engage in?
Yeah, so it's an annual process. You can make a claim. So it's just tied to that IP. So let's say you develop a single qualifying patent or piece of computer program, you can look at claiming the knowledge development box on the profits from that IP every year. So it's continuous. It's only in since 2016. It was due to it was kind of in on a trial basis, let's call it, till 2020, which is what they would have done on the R&D tax credit regime back in 2004 as well. But they've extended it now to 2022, and the expectation is that they'll extend it again, whether it's indefinitely or for another set period. That's still to be defined, but subject to it remaining within the legislation, there's no limit in terms of how much you can claim under it. You just do it annually based on the fact that you still have profits from that IP you've created.
Okay. Okay, thank you for that. Okay, we do have a few minutes more for some more questions, so please do put questions in the Q&A stream if there's anything specific you want. But Jill, maybe I'd like to come back to you in terms of the success levels Irish companies have had, because you showed there that they took a significant proportion of the funding available in one particular year. So can you just kind of contextualize that for us a little bit, and you know, what would you attribute that level of success for Irish companies?
I suppose we're just great. No, seriously. We've always, I suppose, been above the European average in terms of success. But I also think if you look at the client type, a lot of them would be Enterprise Ireland clients. So they would have had the good basis in the first place. And secondly, we have some very good facilities for spin outs and kind of supports for companies in that area. And we also support companies. So I think that's why. But I really believe we do have great technologies and we know how to sell them. And we have young companies who know how to sell themselves in Europe.
Very good, thank you. Okay, there's a question come in there for Alan, and you did mention scars acquired along the way. So just the question is about what may have gone wrong with the first investment partner. So I suppose maybe without getting too specific, just maybe tell us a little bit about some of the frictions that you had along the way and lessons you might have learned.
Yeah, so just it's very simple. All too often we become humble when we're in investment conversations, and you know, ensure that you're interviewing the investor and funding partner as much as they're interviewing you, right? So do DD, you know, trust everybody but validate everything, right? In terms of, you know, when you get a term sheet, validate it, go through the process, and commitment. Ensure that the you know, you coining your phrase, right? You teach them how to treat you, right? So ensure that the milestones are agreed, it's defined. We just had a very binary output, guys. There was a renege on a term sheet, that's it. So we just had to proceed with a different process, right? But what we've learned from it is make sure that ensure you're valuing yourself and manage your cap table. That's the fundamental part of a founder's process. Don't outsource that. Ensure that you're keeping on top of it, you're managing it, and that you're in control.
Okay, well, there's just a comment there in the chat as well that maybe you might address first, Alan. Just in terms of that point at which the technical people can start to hand over to the business people, that sort of crossover point, I suppose, where value is starting to be delivered beyond demonstration, and you have to start looking at managing something as a product. So do you want to talk a little bit about that, maybe when it occurred for you and how you handle that process?
Yeah, so I'm the inventor, right? So I'm a tech CEO, and I jokingly said in my article in the Business Post, you know, don't stay at the party too long, but it's my party, right? So you know, it's quoting, right? Build a team strong enough around you that nobody knows who the leader is, right? So build that team of people that have the skills that you may not have. But again, that's all too often it happens here, guys, where if you export into US, it's seen that a technology leader and a visionary leader is the person that's driving the vision. Whereas here we tend to kind of see the technologist at some stage would expire, but that's not correct. So if it's your idea, you're the inventor, there's no reason for you to hand over anything, right? You build a team around you to drive success. That's it. And you're the advocate of your business. And you're the person that's going to be sitting there anyway with the passion, right? So, you know, we still have employee number one, right? With us to this day, you know, we still have the core team with us that we started with, all technologists, and then we built a team around us, you know? So it's be confident in your ability to drive the business forward from a visionary perspective. Okay, so it's not so much a transition as just a continued. It's an evolution.
Exactly. Very good. Very good. Okay. Well, listen, we're just coming close on time. So what I think we might do is we might just go to each of our speakers in turn, and then we're going to come to Anthony just to wrap up at the end. So, John, if you'd had one piece of advice for organizations who are looking to get onto the funding round, and just in terms of your experience thus far, what's your pearl of wisdom this morning?
So if you're getting started as a startup, I think definitely have a very clear idea that's addressing a niche. Identify a market, go for it, and then definitely come look into the Leos or Identify Ireland for funding. If you're an established client, start now doing your research in AI and looking at how it can do new products and services for your business. There's loads of supports that are out there. Really driving it, avail of them, and just really start doing good practice management of tracking time and resources. It'll save you an awful lot of pain down the road.
Very good. Jill, from your success experiences in Europe.
Yeah, I suppose if I was talking to a company, I would say talk to the previous successful winners. Secondly, use the supports that are there, like myself and Sean and anyone else you can get hold of. And I suppose thirdly, the question I like to ask companies is this really for you? Do you know how much time and money and energy it's going to take you to actually win that money?
Very good. Mark.
So I'd kind of echo what the guys have said, and for me, it's the plan and the documentation. If you want to tap into your R&D tax credits and the knowledge development box, you need to be able to demonstrate you spent the money and you've created something, and show where people have spent their time. So for me, it's all about documentation. I think once you tap into the grants and credits, I haven't seen any companies who don't go back to the well again. I think there's that initial fear of the admin side of it, but just once it becomes part of your business, you can save hundreds of thousands, if not millions, over the course of your first 5-6 years of getting your company up and running.
Great, thank you for that. So, Anthony, I'll leave it to you for the last word and an announcement that you'd like to make. So, over to you.
Well, what I'd say is build relationships. I mean, you're looking here at a board of experts in front of you. You have John, you have Mark, you have Jill, and you have Alan. Build the relationships, know what the funding environment is about, and bring in the types of people that you're looking at here to give you advice and guidance. The last thing I just want to close out on is just a piece of information from Technology ICT SkillNet that the Foundations in AI certificate, the closing applications is March 3rd. Great opportunity to get into the industry, to build up expertise around Python visualization. And what's important about this is there's a mentored project as part of it, so you can really apply your knowledge. So head over to the website and have a look. But on my parting word would be relationships. Build them, talk to the people in front of you, make sure you're aware of what's out there, and bring them in. And I think planning, Mark has said it, get a plan. Everyone said the same thing, get a plan. And great to hear from Alan. And I think the one thing he's talking about is culture. That culture of building a team around you and inspiring them and having passion and ambition. That's what innovation is really all about.
Okay, thank you very much to everybody. I think the real message here this morning is that there are a lot of supports. There's a wide range of supports for all kinds. And as Alan has rightly pointed out, you just need to know what you want to do. And then that will determine the supports that you should go for. But as Jill aptly demonstrated, the success level is high. So it's worth doing. So thank you very much to everybody, to John, Jill, Mark, and Alan. Thank you to Anthony for putting all this together, and thank you to Sarah, our producer this morning. So this is the fourth in the series. Keep an eye on ictskillnet.ie for the recordings of the previous sessions and for our upcoming session as well. So thank you again for joining us this morning. We hope you found it useful, and again we will be circulating all the resources and references from this morning. So thank you very much, everybody. Thanks to everyone for joining us, and we'll see you again at another Skills for Scale webinar.
Thanks everyone. Well done.